Welcome to the Source of Commercial Real Estate, where we discuss all things non-residential commercial real estate, including finding and funding deals, market intel, finding a competitive advantage, and using real estate to live the life that you want. I'm your host, Jonathan Hayek, and today I'm talking with DJ McClure. DJ is the VP of Sales and Business Development at National Flood Experts, driving strategic growth through partnerships and tailored cost-saving solutions. NFE's achievements include consecutive appearances on the Inc. 5000 list and recognition on the Tampa Bay Business Journal's Fast 50 list. With a commitment to innovative flood insurance solutions, NFE has saved clients over $15 million in premiums and added nearly $300 million in property value. NFE is dedicated to providing nationwide clients with education, guidance, and optimal solutions. DJ, thank you for joining me. How are you today?
Doing well. That was a great intro. Thank you for that.
Of course. Well, DJ, let's get into it. I'm really interested in hearing what you have to tell us today. So why don't we start by you telling us about your background, how you got started in this industry, and what your work looks like?
Absolutely. Yeah, I have a unique background. I was a tennis pro for most of my 20s. And I tell people that tennis was the best sales training that you could ever have because every other coach wants to steal your clients every day. Always had an interest in real estate. And, as I was kind of transitioning out of the tennis career, I collided with this company, kind of serendipitously, and met our president and founder, Brad Hubbard, and was just really inspired by the business model and the niche that they were working in. It combined, several things into one, and real estate being, the common denominator, of course, problem solving and helping clients, find a cost savings. And so really, was moved by the company, and, 5 years later, we're, still trying to help investors all over the country.
Cool. So you work with National Flood Experts. So tell me about what is National Flood Experts? Who are you? What is your business?
Yeah, so National Flood Experts is an engineering company that specializes in helping property owners, reduce or eliminate their flood insurance costs. And what we've done is essentially combine several industries into one. Flood zone engineering being the base, but then also an expertise in the flood insurance industry and real estate. So you combine all three of those together, and there's an interesting overlap in understanding, a lot of the trials and tribulations that real estate investors go through from acquisition to disposition, and how the flood insurance, can be a problem, but also how it can be an opportunity. And so we look at properties all over the country, though we're based in Tampa, and, every month we're finding, new solutions and, clients that we can help reduce that cost and, add some value as a result.
Okay, I am particularly interested in this because you talked about opportunities. I'm always looking for opportunities. And I will be honest, I typically don't even consider properties that are in flood zones. So that's one of the first things that I do during my due diligence period. And if I see that a property is in a 100-year floodplain, it's pretty much an immediate deal breaker because from my perspective, I've never even owned a property in a flood zone. I've just been advised by other people that there are so many unknowns down the road, and that you might have lending issues. You're going to have flood insurance requirements if you have lending on it, and it's going to be more difficult to sell once I'm ready to sell it. And so, for the most part, I just don't consider it. And so, I'm really interested to hear what you have to say about what sorts of opportunities there could be working with a company like you. So, you talked about working nationwide. Are there certain asset classes that you typically work with? Is it multifamily? Is it single family? Is it industrial properties? What types of assets do you work on?
Yeah, all good questions. So, in terms of asset classes, we tend to work mainly with commercial properties. Now, we've done projects for pretty much any vertical that you can imagine: industrial, self-storage, warehouse, high-rise office, including multifamily. And so there's different solutions that you can find that apply equally across all the different asset classes of real estate. There's parts of the country that naturally have a higher saturation in flood zones that you could probably think of pretty instantly, right? The Gulf Coast into the Upper East Coast. But, realistically, you've got rivers and streams and lakes and all different types of water sources that create flood zones all over the country. We've found solutions in over 40 states that we've done projects, to this date. And, I think it's a pretty common idea that you shared in terms of just avoiding the flood zone altogether. And the thing about why there's opportunity is that you want to understand how the flood maps are created and what types of things exist that's kind of a checks and balances for the flood zones. So 100-year flood zones exist all over the country, and each local county is essentially in charge of their flood zone management. And so the maps are only updated about every 10, 15 years, most parts of the country. And there's a certain level of detail that goes into those flood maps. No two parts of the country are necessarily identical in terms of how much attention they give to their flood zone, but they're using a broad brush at a certain level. And what we're doing is identifying at the granular building level the outliers, the buildings that actually have a criteria that would make them, outside of the flood zone, and then working with FEMA to have those specific buildings and properties reclassified outside of a 100-year flood zone. And so when that happens, the lender requirement for the flood insurance is then removed. And that can have a whole domino effect of different benefits, as you can imagine.
Absolutely. So I want to get more into this. So you said you're, part engineering company, part real estate company. So National Flood Experts, you talked about you work with FEMA. If a property owner contracts with you to give them some sort of assistance on their property that's in a flood zone, or property they're considering to purchase that's in a flood zone, are you actually doing physical things to the property, like putting up retaining walls or sump pumps or French drains or stuff like that? Or is it more of a paperwork thing where you're lobbying FEMA and the county to get the maps changed?
It really is getting into the data. That's where all the solutions originate. So there are instances where we, have to send our team to the site. There could be some site work that's done. For the most part, what we're doing is identifying within the data, within the layers of the flood map, to show specific characteristics of buildings to where we can prove to FEMA that those buildings can then be reclassified. So not to oversimplify it, right? But when you do tons and tons of these projects, there's patterns that you see, and there's certain things that you tend to notice within certain property types. And so we're looking at all the data from a desktop perspective initially. And then we have an in-house field team that we deploy probably about a third of the time to then gather additional data points to help us strengthen our case to FEMA.
I want to talk about those patterns that you see. First, I want to see if there are any properties we can eliminate. If a listener is considering this right now and they're thinking about a property, are there any sorts of properties that you've seen or worked on where you simply just can't help? There's nothing you can do with?
It's a good question. So there's multiple types of solutions that we find, right? The flood zone's only one. And so this is where the flood insurance expertise comes in, because you may have a house that's, or a multifamily building that's on, stilts, or is built with a garage underneath right on the coast. You're thinking, all right, there's probably no way the flood zone can be changed here. But maybe we get into the flood policy and we find there's some characteristics that can be improved and ultimately reduce that flood insurance premium. And so in terms of the patterns, it's that you tend to find certain types of solutions that might fit better for a condo building, certain solutions that may fit better for like a multifamily solution. But the idea of our audit process is to find every solution that might apply, but then figure out which one of these solutions really solve a problem today and which ones are the most impactful, to the client.
So it sounds like you work in a couple different buckets. On the one hand, it's possible to totally eliminate the flood zone from a particular property. And on the other hand, it might not be possible to totally eliminate the flood zone, but you could potentially reduce the flood insurance premium requirements. So there could be, yeah, so contracting with you all could serve a bunch of different opportunities. I'm going to give you an example. I was looking at this property. It was a great cost per square foot. It was a desirable property. It was an industrial property, so mostly warehouse space, a small amount of office, but I think it was somewhere around 20,000 square foot. And it was, I believe it was bordering a river. And so in that location, it was in a 100-year floodplain. I saw it. I looked at the specs. I was like, wow, this looks like a great opportunity. But then in the description, it said this is in a 100-year floodplain. So I stopped considering it. So if I were to talk to you, national flood experts, about this property, what sorts of procedures would you do to help me consider if this, if there's opportunity in this for me?
Sure. So let's talk about the same example, maybe in a couple different stages.
Sure.
So if you're early on, you call me and you say, hey, DJ, I like this deal. We're thinking about making an offer. At that stage, you probably don't have access to a lot of, hands-on information. So what our team will do is kind of a 30,000-foot view of the property, see what type of neighboring data that we can pull that would give us a good idea of what solutions might be possible, mainly in regard to the flood zone. Right. So we might look at that area and have done some nearby projects and say, you know what, Jonathan, this building probably would be a good candidate for getting the flood zone changed. And that's really what we're looking for in those early stages, is to give you some indication of any kind of information we can find that might help your underwriting, might help you make a decision whether or not you continue looking at the deal. But then once you get the LOI in place, you're under contract into due diligence. Now we have access to maybe getting the flood policy from the seller. We may ask them for the elevation certificate if they have one for the building, or any type of topography type survey, that they have on the property. Now we can really get into the details and start understanding what might be possible and see, okay, you know what? There may be an opportunity here on the flood policy, or there may be an opportunity here in the flood zone, and then see what type of impact that has based on what you're seeing in your other underwriting analysis. This is really the most important stage to identify this, because the seller's situation is not always your situation. The seller may not have any debt on their property. So in your T12, you may not even see that flood insurance exists because they don't have a policy, or anyone requiring them to buy a policy. And that can obviously lead to, some issues down the road.
Okay. So let's continue playing this out. How often are you able to achieve some sort of outcome? So some sort of positive outcome. I don't know if you want to talk about examples or percentage wise, but if someone comes to you with a property they're looking to purchase, how often are you saying, you know what, there's really nothing that can be done here? And how often are you saying, hey, we can save you some money on your flood insurance premium?
Yeah, you'd probably be shocked to know it's basically around 50% of the time. And we've tracked that number since, my first month with the company, and we look at it every year. And even with changes and evolutions in the flood zone around the country and changes within FEMA's flood insurance program, we're still, kind of floating around that 50% number of finding some positive outcome, for the property owner.
If someone is looking at a property, they're considering purchasing a property in a flood zone, and they engage with you, how long of a process, how much time do you need to give an investor confidence to move forward with a property that you can do something to assist them?
If we can get access to those couple documents, the flood insurance policy, the elevation certificate for each building, right? Even if it's say a 20 building garden style apartment community, if we can get all those documents together, usually within 3 to 4 days, we can have our review, our analysis together to then have a conversation as to what might be possible. And then most importantly, we're going to ask a lot of questions around timeline, what type of lending program, what's the short and long term, goals of the property, because we want to understand, not only what the solution would do day one, but perhaps what's the bigger picture of how this might be beneficial in year 3, year 5, when they go to sell it. Because sometimes it's not always about a cost savings day one. It could be about making the exit stronger, easier, because one thing about if you are able to have the flood zone changed is it automatically transfers to a buyer. So to your point about, you avoid properties in flood zones, well, if this process has been completed successfully, you can market your property as not having a flood insurance requirement.
Yeah, I mean, the wheels in my head get turning because if I'm pursuing a property that's in a flood zone, the seller knows that it's going to be difficult to sell, and maybe they understand that they're going to have to take less for it because there are going to be fewer people interested in purchasing this property in flood zone. But if I can work with you and you're saying, Jonathan, I feel really confident that we can get the flood zone eliminated, that's a huge value add for an investor like me who can go in, get a discount, contract with you, and potentially get a flood zone eliminated.
Yeah, this is where understanding the real estate cycle is really important in our process and for our team, um, because we're going to ask a lot of questions, right? So if you're selling a property, like we've had this example many times where the seller doesn't have any debt, or for whatever reason, their lender has not required certain buildings, which is usually an oversight. That doesn't happen terribly often, but we had a case earlier in the year. This particular operator was going to exit their property. They had several buildings in a flood zone, probably around 15, if I recall correctly. And we were trying to explain to him that, say, look, just because you don't have a flood insurance requirement, your buyer 100% will. So whatever price you choose to list this property at, you are going to have to defend it against someone else coming back saying, look, I've got a $75,000 flood insurance cost here. And they're going to want to negotiate down the price. And so we were saying, look, if we go through this process now, so yes, there's not a dollar savings per se, but this is going to allow you to more effectively defend your sale price.
Yeah, I think a lot of investors can connect with that idea that you may not get the ROI on day one, but if in 3 to 5 years down the road, when you're ready to sell this property, and you can say, hey, your flood insurance premium is going to be 50% less than you anticipate, or completely wiping out the flood zone distinction, I think most investors can get on board that there's going to be huge value to be gained down the road. DJ, I want to go into if you have any suggestions for someone going through due diligence. Let's say someone isn't scared away by a property in a flood zone and because it's a good enough deal, or they like it, or they're going to be an owner occupant, or whatever the case is. What sorts of advice do you have for people while they're in the due diligence phase? Maybe they're shopping for flood insurance, or maybe you can't even shop for flood insurance. I don't really know how that works, but what suggestions or advice do you have for people while they're in due diligence for a property in a flood zone?
Yeah, there's a couple of really important points here, to take note. First of all, is like really understand, like I said earlier, the seller situation is not going to be necessarily your situation. And so almost go into every deal assuming that it is in a flood zone, and keep FEMA's mapping website handy. I can send that to you so we can share that out with the post if you'd like. But look up every property, right? So you're obviously familiar with that process, but this gets missed in a lot of cases. And so just look up every address that you're looking to make an offer. And if it's not in the 100-year, you know that there's no requirement. Or you can work with our team. We do that for people all the time. It takes not a lot of time to get something back, within maybe even a few minutes. And so knowing from literally the first step before there's even an offer been made. And so then from day one, walking in, all right, there's 4 buildings in a flood zone here. I've got to make sure that I'm keeping an eye on. And the second point I would make is asking the seller lots and lots of questions, right? So once you've identified it's in a flood zone, asking the seller for a copy of their flood insurance policies. Now, that seems kind of obvious in a way, but there's a couple really specific reasons why. So, flood insurance, different than other lines of insurance, is assumable at the closing, meaning that I can actually transfer ownership from the seller to myself at closing. And you're probably thinking, well, what's the reasoning behind this? Well, FEMA just changed their rating system within the last few years. And in years past, if I went out and got a brand new flood policy, my numbers would be pretty similar to that of what the seller had. There wasn't much difference. Well, now FEMA's changed their structure to where they've essentially determined that some areas of the country they feel are subjectively higher risk, and so they're starting at a much, much higher price point. Well, imagine if the seller has a policy for $2,000 and I assume that. Well, if FEMA thinks that that area should be paying $10,000, a brand new policy is going to start at $10,000. This is called their full risk premium. Whereas if I assume the seller's policy, I'm going to start at that $2,000 price point, and I'm only subject to the 18% increase every year that FEMA has as their cap. So it's going to take me several years before I would even get to that 10,000 mark. And I'll tell you, a lot of insurance brokers, this isn't common practice because, like I said, years past, this really didn't matter. Well, now to give you a really recent example, we had a client in Fort Myers had flood insurance on 5 buildings at $2,000 apiece. Well, the flood map changed. He had to go buy policies on the other 15 buildings at $12,000 apiece for the exact same buildings. So that's a little bit different example, but you ask these questions because then you can start checking if assuming the flood policy is possible. And then the third point I would make, and this seems really elementary, but talk to some neighboring properties. We just had some flooding in and around different parts of Florida. Just asking some of the neighboring properties, like, what's the worst flood you've ever seen from the river or the creek? And now you've got some information that you can use to make a really good, educated decision.
Are all flood insurance policies assumable?
If they're written through FEMA, right? So FEMA's National Flood Insurance Program, or NFIP for short, these have that assumability. If something's with the private market, probably safe to say it may not be. You still see over 50% of people coming from the NFIP program.
Yeah, my guess is insurance brokers maybe one reason they may not bring that up is they're probably going to be paid by initiating new policies, and a broker may not get paid if an insurance policy is just assumed. And so talking to someone like you, there's a ton of value if you can save thousands of dollars a year by assuming the seller's policy. That seems really valuable. I'm going to ask a naive question. I don't live in the Southeast. I never have. Does flood insurance cover natural disasters like hurricanes?
So a good distinction to understand between property insurance and flood insurance, right? So flood insurance is defined by rising water. So any type of rising water that would trigger a flood policy.
Okay.
Whereas property insurance has a little bit more stipulation. Property insurance is going to come into effect if you have a pipe burst and it floods down 3 floors. It's going to help with the repairs for something like that. But a flood policy is only going to cover rising water from the outside.
So rising water, that would include storm surge, flooding rivers and creeks and things like that?
Exactly. Now, it's important to really look at your policy specifically, talk with your broker and understand, these types of scenarios, because obviously there's a variety of different situations you can run into. But if you're through, pretty standard written policies, that's what you can expect from a coverage standpoint. Now, I'm not an insurance broker, just to say that, so that everyone knows. So I always push someone to have this conversation with their broker so they truly understand, their policy terms.
I want to shift the conversation to an investor who already owns a property with that's already in a flood zone. So they're not looking to purchase it. They already own it. And let's start with, let's say they're trying to refinance a property. And is there anything that a property owner should be aware of in terms of, you just mentioned FEMA maps changing. Apparently that's a thing. I wasn't aware of that. So maps change, regulations change. Someone wants to refinance a property. Is an owner going to be surprised by anything if they go to refinance a property in a flood zone right now?
It's a really good question, and it's timely, based on the way the market has, a lot of debt maturing. As you switch from like a standard loan program into perhaps like an agency program like Fannie Mae or Freddie Mac, quite different requirements in terms of the lending program in regard to the coverage limits of flood insurance that you have to have. So like a standard loan program may only require that you cover $500,000 for each building. Now, that's the maximum coverage level that an NFIP policy will go to. Private market, depending on the type of company and the property type, they may go up to several million or beyond. So Fannie Mae and Freddie Mac typically will require the full replacement value in addition to business income for 12 months being covered. So you could imagine someone has a 10 building site that's $5 million in coverage across the 10 buildings. Maybe they're paying a few thousand, for each building. They go into a Fannie Mae situation and they may come back and say, well, we want an additional 10 million in flood coverage. And so you're kind of figuring out, well, what do I do? So your broker is going to have to go to the private market. That additional 10 million could be 20, 30, 50,000, depending on where it's located. And that can be quite a sticker shock when you're going into the refinance and now it's really messing with the financials. Obviously, if the situation is reversed, if someone has a really high flood premium going into the refinance and they're able to get the requirement removed prior to the refi starting, well, now you're going from a high number to a low number, so that's only going to work to your benefit in terms of the cash out value. So depending on the situation, having this looked at, at least a few months prior to the refinance can have a whole series of different outcomes.
You had mentioned getting insurance through FEMA versus getting insurance privately on the open market. Is there a difference, I guess, in pricing, or what should someone be thinking about if they're making a decision? Should I go private to the open marketplace or just get the FEMA provided flood insurance?
Sure. With FEMA, that you're always going to have a policy, right? So an example would be is that you're not going to get 2 years into the policy and then get non-renewed by FEMA, assuming some outlier situation hasn't occurred. With the private market, it's their own investment in you, right? So the way they're looking at you is you're a risk and they want to make a return on their investment in you and with the insurance. So if their attitude on a particular area of the country changes, they can choose to non-renew your policy. At this point, you're scrambling to either find another private carrier, and if they're using the same criteria, that might be fairly tough. So then if you're going back to the NFIP, remember that idea of the full risk premium, right? So FEMA didn't used to tell you what your ceiling price was for your property. So now every property that has renewed with FEMA has a full risk premium on the declarations page. And so it's kind of hidden in the middle. And you might see if you go all the way to the bottom, you're paying $2,000, but your full risk premium might be $10,000. So if someone took a more appetizing policy price and went to the private market and then has a non-renewal, they're coming back to NFIP starting at that 10,000 price point or whatever it might be. So it's just a risk that you kind of have to know. It's a good conversation to have with your broker and say, how many non-renewals are you seeing from this company recently? And then try to imagine what's the long-term impact of what choice you might make.
DJ, I want to ask you about properties that are not in flood zones. And if you ever work with property owners that maybe they're not technically in a flood zone, but they are concerned about climate change, about natural disasters, about rising waters, hurricanes, um, storm surge, flooding rivers, and they think, you know what, it's not required that I have flood insurance, but maybe they have limited partners and investors, and they want to be looking out for their property and their investors. Are you ever in a scenario, or do you ever recommend that someone actually does get flood insurance when maybe it's not even technically required?
A lot of our clients keep their flood insurance policies even once the lender has dropped the requirement because it's some of the more ancillary benefits that are of greater value, like on the exit or the refi. And so, depending on the part of the country, you tend to see a lot of people maintaining their flood insurance optionally, or maybe they have the requirement removed prior to closing, and then after closing they choose to buy it because then it's not counting against the financials. But for properties that are in lower risk flood zones, especially if they're neighboring a 100-year flood zone, depending on history of that area, how common it is for water to rise or to enter close to the property, um, I think it's good to understand that technically everything is a flood zone. It's kind of the going saying, doesn't really matter what type of flood zone it says you may be. If there's a water source within some proximity, it's always a chance. Storm surges are fueled by, huge amount of wind and pressure. And depending what, you know, proximity the storm is, if it's north or south of you, it could potentially move a lot of water that you'd never expect to move. We've obviously seen that in storms in the past few years. So it's something you can explore. And, if you're in a a lower risk flood zone, this may be where the private market is a great option. They may consider your property a lower risk, so you may have a lower cost. Um, Unfortunately, FEMA does not recognize the X zones or lower risk zones with the lower pricing that they used to. So definitely worth exploring your different options if that's something you're interested in.
DJ, I know you're located in Florida, and insuring properties in Florida is a hot topic right now in the commercial real estate world. So I wanted to just kind of get any insight from you. Me personally, I had mentioned before that I don't consider previously, maybe I will now, I haven't considered properties in flood zones. I'm also not currently considering properties located in Florida, just for the increased risk of natural disasters and flooding. So I want to get your take on kind of the current insurance marketplace in Florida. What are you seeing and from investors and property owners in Florida?
There's still quite a few properties changing hands down here in Florida. Even things that are in coastal areas or high density areas. I think Florida is always going to be attractive in that regard. What people are seeing in terms of the insurance market. This is all secondhand for me, of course, not being a broker, but a lot of investors are talking about how it's really tough to get the wind coverage. Brokers I know are talking about how difficult it is to get the deductibles that they used to be able to get in years past. So that's having to really, be creative in a lot of ways to make deals pencil the way that they used to. But here in Tampa, I know of several transactions that have just happened within the last month. And so deals are still possible, but the IRRs that we were seeing in years past are not always as easily achievable now. And, people are holding properties for a few more years down here than maybe they'd planned, early on in the business plan. And I don't think the flood zones are stopping people. It's just about, maybe that expense is something that you can fit into the business model, or it's a risk that you're willing to take. Having known the history of, we had two storms here this year, most recently, and then you had the big one last year. Well, there's properties in Fort Myers that didn't flood. So if it survived that storm, that may give you some decent confidence that, that property can take a punch. So this is where just so many different, low value demographics of an area can be, can be important.
And I know Florida is such an attractive market for so many investors, and I'm sure I'm an outlier in choosing not to invest there. I've heard of some insurance companies simply leaving Florida and saying it's not worth the risk. They're not making any money insuring properties in Florida. Is it specific to flood insurance? Is that a possibility in Florida? Or, like you said previously with FEMA, if it's in a flood zone, FEMA has to insure it under, how things are currently?
Yeah, so the private markets, right? They can pick and choose where they want to invest their coverage dollars.
Mhm.
So you definitely see certain parts of the country where the private flood carriers just choose not to accept clients. Whereas FEMA being a federal program, the criteria that all the different FEMA carriers operate within, um, they're going to offer you a policy, regardless of, what part of the country that you're in, Florida included.
Okay. DJ, if a listener is hearing this and saying, wow, this sounds really interesting, there could be opportunity here, but how do I know that I'm going to get a return on this investment, on this purchase? If I contract with national flood experts, I'm going to have to pay you money, and maybe you save me something, but what if I don't save, how much I paid you in order to save that money on my policy? Can you talk a little bit about ROI and what sorts of investors should seriously be thinking about contracting with you?
Sure. And really, the best thing is that the initial review that we do is no cost to the client, right? So we look at hundreds of properties every month all over the country. There's no upfront cost for our team to spend some time looking into the data, really just seeing what opportunities and solutions may be possible, and then having a really intelligent conversation between us, asking some good questions, trying to really understand the situation, be it the life cycle that we're in, the stage, history, and maybe what someone's risk appetite might be or what their end outcome that they're desiring, and then having a good conversation around what the before and after could look like. And if someone chooses to move forward with a solution at that point, we're actually going to guarantee the outcome. So if we go to FEMA and FEMA accepts our solution, then we'll generate an invoice for the contracted project. But if we fail a project for any reason, we're not going to charge the client. And this is after we've gone under contract with the client. So they know well up front what the end goal and end outcome is going to look like before really being on the hook for anything.
You had talked earlier about a certain document that you like to see kind of in that due diligence phase. You talked about an elevation profile. And I personally, in all the properties that I've purchased, I've never seen one of these. So how easy, if someone doesn't have one of these elevation profiles, how easy is it to acquire? Is that something you all do, or is that a local engineer that generates that? How is that acquired?
Yeah, so a lot of times you will see an elevation certificate follow the flood policy. Not always. If it's a newer property, then most likely there was one generated, when they finished the construction. Doesn't mean that the seller or current owner has a copy of it, but that's where we start. And then if that's not possible, we're going to look at the flood policy or look at whatever data we can find on the property, and then make an assessment and an estimation as to, all right, what solutions could be possible here. And then if field data looks to be beneficial, then we'll have a conversation with the client and say, okay, we think that such and such solutions possible here. Maybe we think we can get 10 buildings out of the flood zone. Is that a solution that you would like to explore further? And we'll say, based on what our engineers can tell, this is a better than 50% chance that the field data will help get us to the finish line. That's the only time our clients have an upfront cost. And that's just to help us really get further into the review process. So we have a field team. We deploy them all over the country. And that will then get on site, collect all the different data that we need for a variety of different solutions possible, bring all that back in-house, redo our engineering review, and then talk to the client about what we found.
Okay, makes a ton of sense. Now I know why I've never seen an elevation certificate, because I've never purchased a property in a flood zone. And if I
Yeah.
would have purchased that type of property, I would have seen an elevation certificate. Perfect. Well, I mean, it sounds like a pretty good deal. I mean, it's basically a risk-free conversation up front. You can go over, what the investor is hoping to get out of, working with you, and you can talk about options, talk about pricing a little bit. Is it, specific to each property? Is it based on if you're working with FEMA versus working with just a flood insurance policy? What should people expect in terms of pricing?
Yeah, it is different for each property for sure. And it's mainly around how each individual scenario is a bit unique. But, in a lot of cases, if we're changing the flood map, our pricing will be somewhat in line a lot of times with what the annual cost of the flood insurance may be. That's kind of like a base starting point of the conversation. Similarly, if we're doing an insurance consulting scenario, it may be relative to kind of the before and after of the flood policy. And so, again, we're going to talk about all this after the review and talk about this before the client's really committed to anything. So they know 100% what to expect once the outcome has then been completed. And common question that we get, around this is, well, what's the success rate? Well, being that we're going to do all this work up front, we want to make sure that we're keeping a pretty high batting average. So, within these cases, it really is a 99% success rate once we're to that stage. And then depending on the type of project, we can give someone a pretty good estimate of the timeline, be it a few weeks or maybe even 4 to 6 weeks at the longest to then get that solution completed.
Well, that's great to hear, and I know I've learned a ton today. I can now maybe start to consider some properties and flood zones, knowing that I can maybe send you an email, give you a quick phone call, and just kind of get a risk-free overview of what the possibilities are with a certain property that I'm considering. DJ, if someone is thinking the same thing and they want to talk to you, have a conversation with either you or your colleagues at National Flood Experts, how can people connect with you?
Yeah, if they'd like to send an email to info@nationalfloodexperts.com, I'll be able to connect you with, one of our sales team that can really, take you through that initial consultation. They're welcome to find me on LinkedIn, DJ McClure with 2 C's. But would love to have a conversation. It's a new puzzle in every case that we look at, and our engineers love, solving puzzles.
It is really hard to make deals work right now. And so if this is another opportunity for value add, I am all about it. DJ, thank you so much for joining me. I learned a ton. I know our listeners got a ton out of this today. Listeners, if you appreciated this and you enjoyed this conversation, feel free to reach out to either one of us, connect with us. We would love to talk to you about commercial real estate and potentially getting your property out of a flood zone. Thank you so much for listening. Until next time, take care.